We have a range. We have like a bear case and a bull case, right? So the most reliable indicator we've had so far is the pie indicator, and it's putting the peak at 395,000. Now, this is what it's telling us. It's been extremely accurate, the most accurate. It would mean that we would have to see Bitcoin sustain $200,000 for months to get to that level. There's always a downturn. There's never been an asset in the history of the world that moves up in a straight line or down in a straight line. So of course, we're going to go up and down. We know Bitcoin typically has 25% drawdowns. That's not a bear market for Bitcoin. Certainly, we're going to see 25, 30% pullbacks, like for sure. Now, will we see 70, 80% pullbacks? I think there's a good case for us not seeing that.
This latest Bitcoin analysis features Mark Moss delivering an in-depth look at where we are in the market cycle. He highlights a possible top forming soon and the potential for a crash afterward. Mark breaks down the data and factors that could lead to these changes.
If we look at the MVRV ratio analysis, so that's market price versus realized price. It's one of the most used indicators on on-chain data. What the MVRV is telling us on the conservative case, maybe call it the bear case, is 140, and the bull case is 200. Now, these are moving targets because if these use, momentum indicators and on-chain data. So if, for example, we start seeing, like, let's say all these treasury companies that made these announcements over the last couple of weeks, it's going to push this. So we can't, it's hard for us to predict today, but it looks like somewhere in the 140 to 200 range would be for this cycle. Another way that we look at this, and this is for my technical analysts out there, we use Fibonacci extensions, right? So those are mathematical formulas that would set resistance and support levels. If we look at it from those, we can see 170 is the base case, with 220 being like an aggressive upside. And if we look at all of those together, I mean, it's basically 140 to 220. I know it's a big range. People don't like that. But that's where I'm kind of thinking. Again, I'm trying to think of hope for the best, plan for the worst. I'm thinking like a 150. I don't want to set myself up for disappointment, so I think somewhere in that range. But that's what the data is telling us. What about MicroStrategy? I believe that a well-run treasury company should always trade multiple times to NAV, at least 2 to 3 times NAV. I think what happens is that's a Bitcoiner lens, and it's not Bitcoiners that are buying these, it's TradFi. So TradFi is not trying to beat Bitcoin. They're just trying to beat inflation or the S&P 500. So I think what I'm calling escape velocity is when we get out of Bitcoiners buying it and TradFi starts buying it. But let's think about MicroStrategy for a second. Let's say that they grow that to 700,000 Bitcoin this cycle. Then we say, well, where will the price of Bitcoin be? Which I've already given you some examples. And then we look at what this MNAV premium could be. They have a 2 to 3 times historical multiplication. So that would put MicroStrategy's price somewhere between 800 to 1,300 based on Bitcoin hitting 170. So I said worst case 140, bull case 220. So if we put Bitcoin sort of in the middle at 170, that puts MicroStrategy between 800 to 1,300. Basically, 3x from here. So that's why MicroStrategy should go up faster than what Bitcoin does. So I actually put this on X earlier today, and I posted the Sharpe ratio. The Sharpe ratio is basically what shows like a risk-adjusted basis for an investment. And I put it up for the S&P 500, for the U.S. government bond, for the long bond, and Bitcoin over the last 5 years. And over the last 5 years, Bitcoin has been a better risk-adjusted, less risky investment than both the S&P 500 and the U.S. government bond.
Wow.
Which is pretty amazing. But it's asymmetric to the upside. Now, to answer the question, one, there's always a downturn. There's never been an asset in the history of the world that moves up in a straight line or down in a straight line. So, of course, we're going to go up and down. We know Bitcoin typically has 25% drawdowns. That's not a bear market for Bitcoin. So certainly we're going to see 25, 30% pullbacks, like for sure. Now, will we see 70, 80% pullbacks? I think there's a good case for us not seeing that. And the reason why I would say that is 2 things. Number one, let's go back to the 50-year cycle. So in the 50-year cycle, there's 4 distinct phases that we go through. So now we're in that frenzy phase. We have massive institutional and sovereign buying, number one. Number two, though, what we do with technology is to understand how fast the technology will reach adoption, full-scale adoption, a color TV, a washing machine, an iPhone, etc., is we use something called an S-curve. So an S-curve basically tells us the time it takes to go from 0 to 10% is the same time it takes to go from 10 to 90%. So it goes into this parabolic part of the curve. That's right now. That's in the second part, the second phase of the 4 phases of the 50-year cycle. And so I think what we could see is as we enter the parabolic phase, it's much more asymmetric to the upside and it's muted to the downside. So we still get the big upside, but we get less of a downside. And one more reason why I also think that is that, and I kind of hinted to earlier, where potentially we could see the CAGR hold or accelerate from here is because what happens traditionally is that most of these financial assets that we see are typically started with capital, venture capital first, then it goes into private equity capital, whatever they're doing before pre-IPO, et cetera. So they raise the big money up front, and then they dump onto retail after they go public, and then it's big checks first, little checks after. Right? So you get the big checks, you get the big market cap, and then you get the little retail checks coming in after. And the little retail checks don't move the needle on the big market cap. But Bitcoin was started the opposite way, right? It was you and I buying in the early days. Now I started buying in 2015 was $300, and people go, "That's amazing! I wish I could have bought $300." But it was like risky to put $1,000 in back then, right? Now people are putting hundreds of billions in. I do think it's probable. I think it's probably my base case that we don't see the 70, 80% drawdowns of the past. Maybe it's more muted down to like a 50% level or something like that. But it's going to come.
Bitcoin is experiencing a tentative rebound today, recovering after a period of significant losses. The overall crypto market is showing a general upward trend, driven by optimism regarding potential interest rate cuts by the U.S. Federal Reserve later this week. This upcoming economic decision is the main focus for traders, historically causing volatility as the market tries to predict the Fed's stance. Bitcoin's current price movement suggests it is stabilizing above a key support level, attracting buyers who see value after the recent dip. However, market sentiment remains cautious, as the possibility of further macroeconomic uncertainty and institutional selling still looms. The next few days will be critical in determining if this modest rise turns into a more sustained recovery. Wish someone taught you Bitcoin earlier? Now's your chance to do better for your kids or young family. This teen ebook is perfect. Link in the description.